Hello, everyone, and welcome to our session, 5 Steps to Achieve Automation in Accounts Payable. My name is Sam Bullard-Lima, and I'm a Senior Product Marketing Manager here at Iron Mountain. For those of you who aren't familiar with Iron Mountain, we are the global leader in information management services. I'm joined today by my colleague and subject matter expert, Will Fitzgerald.
Thanks, Sam. As Sam mentioned, my name is Will Fitzgerald. I'm a Senior Product Manager at Iron Mountain for our Accounts Payable horizontal solutions.
Today, we'll be focusing on 5 key steps that Accounts Payable can use to achieve streamlined, automated workflows. So, let's start with step number 1, visualize your process. What steps should companies take to undergo digital transformation in their accounts payable processes?
Sure. So first, accounts payable staff are traditionally viewed as a back office role that simply pays the company's bills. Organizational leadership has begun reevaluating the role of accounts payable and how they can better contribute to healthy cash flow for their company. The importance of accounts payable staff's role in an organization cannot be underestimated. In fact, research shows that around 38% of startups and new businesses fail due to cash flow issues. Before embarking on a digital transformation journey, companies should start by mapping out their current processes. While visualizing your accounts payable process certainly includes a traditional whiteboard exercise to draw up your okay to pay approval process, it's also critical to understand the landscape of your company's supplier documentation. This includes things like developing an understanding of how many direct spend transactions are done through established procurement processes versus the number of indirect or maverick transactions that are processed per year. Also, determining how many long-tail suppliers you are currently working with and the volume of transactions being processed for those suppliers. You want to understand the number of suppliers that have adopted a buyer-supplier portal if you have started offering one, versus the number of suppliers that are sending invoices through traditional methods such as mail, physical mail, or email attachments. You also want to start understanding where suppliers are sending their invoices. Are they coming directly to your company's accounts payables department, or are they being sent directly to the buyers within your organization? Breaking down the format suppliers are sending the invoices is also a critical component to this mapping process. You want to determine how many are arriving as a physical copy, how many are being sent to a dedicated email inbox, and how many are being sent electronically. Cataloging your company's purchase order versus non-purchase order backed invoices is also a critical component to mapping out your current processes. Finally, capture the unique rules your company has in place to determine necessary approvals for invoices that exceed certain cost thresholds or contain costs associated with particular cost centers, as that'll help determine who is involved in what particular approval process. All of these metrics and processes are key to gaining insight into where bottlenecks arise and help your organization determine the necessary steps to streamline and automate these processes.
These all seem like great strategies for companies that are just starting their digital transformation journey. How can companies who are further along on that journey achieve greater efficiencies?
Yeah, it's a great question. So achieving greater efficiencies in AP processes has become a higher priority for leadership, especially as finance departments have started looking at initiatives to transition accounts payable from a traditionally back office role to a more strategic role. Some of the biggest challenges in finding the right solution or solution set have to do with the number of vendors available, the specific use cases those solutions that are in place already address, and the policies and mandates required for the countries in which a company operates. It's critical that when starting your digital transformation journey, your company takes an inventory of the solutions you already have in place, any redundancies or functionality gaps, and document your current processes, looking at your solutions holistically to find potential areas of improvement. Understanding the challenges still encountered in AP organizations, even with digital solutions in place, will further enhance your staff's efficiency, freeing up time for those strategic initiatives.
What information does the company's AP staff use to process payments?
Prior to processing payments, AP staff must wrestle with mountains of decentralized data and documents stored physically or in disparate systems to validate supplier invoices. Manually cross-checking an invoice against supplier records, contracts, purchase orders, goods receipts, and invoices already paid is time-consuming. It's error-prone, and it requires access to multiple systems and spreadsheets. Centralizing data and documents used to finalize payments supports your accounts payable staff in a number of different ways. First, it eliminates the risk of fraudulent payments. It can eliminate duplicate payments, which also account for up to 2% of a company's total annual payables. It'll also help improve relationships with your suppliers and help your company realize savings through early payment discounts. Finally, reducing organizational risk by retaining all supporting documentation for the necessary amount of time, ensuring your company is following industry regulations and avoiding unnecessary storage costs.
Could you talk a little bit about where the information comes from and how to improve data accessibility?
Yeah, that's a great question, because before AP organizations are billed by their suppliers, the company should have clarity into their requisition process and the data that's required to make a purchase. Let's start with direct spend, or the expenses that are directly associated with an enterprise's production, such as the purchase of raw materials and services. When companies make direct spend purchases, the buyer or requester must first create a requisition, typically in the company's ERP or procurement system. The requisition will contain information such as the supplier, the description of goods or services, the quantity, unit prices, and total prices. When requisitions are approved, a purchase order will be issued, which is then sent to the supplier. Typically, an ERP system will allow tracking of a supplier record, which includes information like the supplier name and address, as well as the payment terms for that particular supplier. Connectivity between an invoice processing system and the company's ERP data is critical to enabling staff to efficiently validate the invoices that they have received.
It sounds like transactions related to direct spend have very well-defined processes. How does data accessibility relate to indirect spend first?
So indirect spend is an area where organizations struggle the most with both accessibility to the data and the amount of manual work that's required to process this data. Indirect or long tail spend refers to expenses that are not related to production. That could be anything from facility management to marketing expenses or even office supplies. The reason that long tail spend creates the most strain on an accounts payables team is that despite these suppliers and vendors accounting for only about 20% of an enterprise's total spend, these transactions make up about 80% of a company's total transactions. In many situations, these purchases are done outside of established procurement processes, which is why organizations typically refer to these as maverick purchases. The lack of supporting data and documentation that is created through established procurement channels leaves AP teams with the burden of manually extracting and keying data from invoices into their finance systems. Also, collaborating with buyers to confirm their vendor bills are accurate and uploading proof that delivery was completed. The amount of manual effort required to finalize payment for these indirect transactions is costly and time-consuming. It leads to delays in delivery and potentially in payment. This has a lot to do with the low adoption of e-invoicing solutions by long-tail suppliers and the mountain of paperwork that an organization has to handle to complete indirect pay transactions.
A lot of invoices are still being sent through the mail. What can organizations do to streamline transactions that are done through physical or even digital mail?
Well, first, an organization wants to take an inventory of the number or volume of invoices that they receive at specific points of entry. There are several considerations that should be taken into account when dealing with high volumes of unstructured paper-based invoices, including the volume of paper invoices being received through the mail, the infrastructure in place to handle invoices being physically mailed, and how those invoices are being routed. You also want to keep in mind the volume of email invoices that you're being received, as those are also potentially considered unstructured invoices if they're sent as email attachments. You want to consider how your organization is accessing the data and documents after they have been processed to ensure compliance with record-keeping mandates. And finally, consider how your organization is dealing with the paper to transition to a more paperless model. Transitioning from a paper-based to paperless process has many benefits for AP organizations and companies as a whole. Generating strategic initiatives to route mail to a centralized location, or even outsourcing the process of mail collection and digitization has advantages in terms of a company's costs and environmental consciousness. Companies spend less time and money when they only have to deal with digitized records. Digital records, especially for AP staff dealing with invoices, are far easier to handle as companies can focus solely on implementing solutions that handle the digital record instead of having to manage the physical records. And this is going to help companies facilitate higher touchless processing rates.
Let's talk a little bit about touchless processing. So we know that paper and PDF formatted invoices still account for up to 70% of a company's supplier invoices. What is touchless processing, and why is it so important to a company's cash flow?
So touchless processing refers to the rate at which accounts payables can process invoices for payment without requiring an accounts payable staff member to actually physically touch the invoice or even manually key data from that supplier invoice into an established finance system. Virtually all manually processed invoices can be quite costly to an organization. Some research shows that the cost of processing a single invoice manually, especially paper-based invoice, varies across organizations, but can be in the $30 to $40 range. The cost per invoice not only includes the labor overhead required to key data manually, but also the costs associated with processing late payments, missing out on supplier discount opportunities, and the time that AP staff can be using to focus on more strategic initiatives like dynamic discounting. Improved touchless processing rates can be realized by introducing intelligent document processing, or IDP technology, that automatically extracts, matches, and finalizes invoices for payment.
How do IDP solutions improve an organization's touchless processing rate?
Intelligent document processing solutions utilize OCR capabilities, machine learning, and integration to read, classify, extract, and match data to eliminate anywhere from 50 to 75% of the human touch required to process an invoice for payment. When unstructured invoices are received, intelligent document processing immediately begins working behind the scenes to extract data from the invoice, starting with the data included in the invoice header. The header information will often contain the corresponding purchase order number that was submitted to the supplier to request the specified goods or services. When a match can be made to a purchase order, the intelligent document processing solution will automatically draw data from the purchase order to key the invoice line items, ensuring the goods or services description, quantities, costs, tax, cost centers, and total amounts in the invoices match the expected values from purchase orders. If the invoice received from the supplier matches the data included in the purchase order, an IDP system may be able to finalize the invoice for payment without requiring human intervention.
If a company introduces IEP, are they able to remove the human touch from their processes altogether?
Unfortunately, it's probably unlikely. Human intervention cannot be completely eliminated from invoice processing, especially when dealing with a large volume of unstructured invoices. Artificial intelligence and machine learning greatly improve an organization's processing times, but invoice exceptions and business rules, IDP tolerance settings, and invoice errors or mismatches provide scenarios where human validation is still going to be required. For those reasons, organizations should leverage solutions that provide intelligent document processing and human in the loop capabilities. Human in the loop is an industry term, but what we're really talking about is allowing humans to validate information when machine learning models are not confident in the data that was extracted. Low confidence extractions are sent to an exception queue where accounts payable staff can review the original invoice, the extracted data, and either accept or update the value that was extracted. The loop in this scenario also assists the machine learning model by allowing AP staff to provide feedback to the model, assisting that model in learning the nuances of unstructured invoices the next time that particular exception is encountered.
Research has shown that IDP can improve invoice processing by 67%. Are there any other benefits of implementing this technology?
Yeah, so we talked about how automation in the form of IDP supports and enhances invoice processing. It's also important to remember that automation is not limited to the capabilities that an artificial intelligence tool can provide. Automation in accounts payable also means providing automated notifications or alerts to staff members when reviews are pending, allowing users to set up IDP confidence thresholds to determine when human validation of blurry data or unclear data in documents is required, generating a robust rules engine that automatically determines when human intervention is required based on the data extracted, guiding AP staff to specific actions requiring immediate attention through intuitive dashboards and user interfaces, pulling data from external sources that are critical to daily operations, such as ERP systems and procure-to-pay suites, and connecting AP solutions with external systems to update necessary data and streamline actions required in external systems.
What stakeholders are going to be involved in processing invoices?
Depending on the format suppliers send invoices and the structure of an organization, the simple answer is that virtually any employee within an organization could be involved at some point in the invoice payment process. Take franchises as an example. In that scenario, each franchise is independently managed. Each location receives invoices from their suppliers, validates the invoice they receive, and sends that invoice to their corporate headquarters or central corporate processing location for payment processing. Corporate headquarters may need to reach back out to a franchise to confirm the information prior to processing payment. Exception handling is another situation where collaboration between AP staff and the buyers or goods or services within their organization is critical. Virtually anyone within a company that is buying goods or services may be asked to verify an invoice and provide supporting documentation. Take, for example, a scenario where a buyer is purchasing office supplies. If the total cost of the office supplies is within the company's set spend limit, the company may not require the individual purchaser to issue an official requisition and purchase order. When accounts payable receives the invoice, this non-PO invoice will enter an exception queue. AP staff must first verify the data in the invoice before determining the necessary buyer within the organization to route the invoice to prior to payment. That buyer must then upload a goods receipt to verify the purchase, and in some cases get approval from their department head before that invoice can finally be paid by the AP department.
But since nearly anyone could be involved in paying an invoice, how can companies actually continue to optimize this process?
Well, one major trend we're seeing is companies switching from unstructured paper-based invoices to digital invoicing systems. Digital invoice systems allow buyers and suppliers to connect directly, eliminating the time required to process and store paper invoices and simplifying intelligent routing. Digital invoicing systems or buyer-supplier portals do come with their own challenges. These systems are typically voluntary, meaning organizations offer these solutions to their suppliers, but suppliers can ultimately decide if they're going to use their customers' portals. In many regions around the world, adoption of digital invoicing systems has been quite slow. In fact, around 70% of business-to-business invoices are still sent from suppliers to customers in physical or PDF format. For organizations that receive unstructured invoices that require manual processing, a suite of tools that automates as much of the process while providing intuitive user interface capabilities to support manual tasks are going to be absolutely essential. Customers must also take into consideration their retention policies for financial documentation. The IRS requires companies to retain invoices and other financial documentation for up to 3 years. Ensuring your company has both a centralized repository for managing and maintaining financial records while considering the costs of storage underlines the importance of having a solution that enables robust records retention capabilities.
Thanks, Will. So now that we've gone through each of these 5 steps, could you please walk us through some of the key benefits that a company might realize if they were to implement any of them?
Most importantly, by achieving more automation in your AP department, leadership will be facilitating a more positive employee experience. As we mentioned earlier, accounts payables is no longer seen as a back office job that's simply involved in manual tasks like data entry. Accounts payables is now focused on developing strategic initiatives that promote healthy cash flow for the entire company. Additionally, a company should be able to attract higher quality talent in their AP department when candidates know they will have modern tools at their disposal. Another benefit that automation leads to is a reduction in costs. Costs resulting from lack of automation come in several different forms, such as the reduction in staff time required to perform manual data entry, approval, and matching. Freeing up time spent in performing manual tasks gives staff more time to develop dynamic discounting strategies and source materials and services in the most effective manner. Automation can also help companies detect duplicate or potentially fraudulent transactions before those invoices are paid. Eliminating the storage costs and processing of paper also reduces company overhead and facilities costs. Companies should also find that automating AP processes provides more control of their financial records and assists them in complying with regulatory requirements. Automating the ingest of data and documents provides assurance that your financial records are being managed in a single repository. Creating actionable data by extracting the contents of documents helps companies ensure they're following necessary retention requirements and able to quickly access supporting materials when audited. Finally, automating many of the manual processes helps to ensure transactions are completed in a timely manner. Leveraging AI and intelligent workflows improves touchless processing rates and ensures the right staff are involved in handling exceptions. Centralizing collaboration between departments not only promotes timely response, but also reveals metrics that can be used to further streamline the sign-off of those transactions. At the end of the day, automation is a critical component to reducing days sales outstanding and improving supplier relationships. So in terms of the solutions that Iron Mountain provides, first, we provide services and solutions that assist in companies converting the physical artifacts to digital. Iron Mountain provides pickup and digitization services for invoices received through the mail. Our intelligent document processing solution connects with email and ingests digitized invoices to automatically classify, extract, and key index header data and line item data. Our low or no code platform allows end users to ensure the critical data from supplier invoices is being extracted. We provide connectivity across platforms, which is going to assist in integrating with your existing business systems and facilitate invoice matching, data enrichment, and one-click export to financial systems for downstream processing of transactions. Our platform provides APIs that connect and automate these processes, enhancing touchless processing rates for our customers. We provide solutions that enable anytime, anywhere access. Centralizing digital invoice copies and metadata in a single repository is critical to ensuring anytime, anywhere access. Utilizing Iron Mountain's content services platform, users can locate accounts payable records by searching against their extracted metadata. The web-based interface provides a single point of access for running reports and managing financial records. Iron Mountain's secure enterprise content services platform enables collaboration between stakeholders and provides tasks for approvals and validation, allowing your team to establish unique business rules for handling exceptions and approvals. Within the context of the content services platform, all actions are logged and maintained for system administrators and auditors to access. The solution provides secure storage, data encryption, and role-based permissions to keep data safe. Utilizing configurable rule sets, administrators can also create permissions to determine when a user can access a particular record that can utilize a combination of metadata fields extracted from invoices and other documents. We provide a streamlined solution to help manage the entire life cycle of your records. Iron Mountain can dispose of customers' physical records. We securely store, shred, or return physical records to customers when needed. And we have a large number of customers today and decades of experience working with clients in handling their physical records. Iron Mountain partners with AWS to offer you a variety of digital solutions like those covered in today's presentation. They can help accelerate your journey from physical to digital to cloud at a petabyte scale. We collaborate to help you securely access and store your information, find out when you need it, and automate workflows for your improved collaboration. Using our solutions, we also unlock insights with our secure content services platform to provide reporting and searching capabilities at your fingertips.
Thank you for joining us today, Will, and providing your insights into automating invoice processing. If you'd like to learn more, we have a few ways to make it easy for you. You can ask your Iron Mountain sales representative for more information, or you can visit our website and request a demo or search our resource center for accounts payable. Thanks for attending today's program. Goodbye.